This is probably going to be maybe a 5-minute video, but I think it'll be worth it if you stick around. I just want to clear up some nonsense around understanding order blocks, understanding fair value gaps, understanding the reality and theses behind it, because that's the most important thing, right? It's not enough to just see a gap on a chart and think, right, that's a fair value gap or this or that. You've got to understand the context of why it's important. So that's what we're going to cover today, right? Okay, so look, here's on the chart here. This is NQ. Price has been going up, as you can see, and then price is about to come back down. And so what we're looking to do is think about a setup. Here's the current high. What are the 3 golden rules that I like to look at? Number 1, whenever we see a break of structure, I want to see 3 things happening. Number 1 is the break of structure. Number 2 is volume, a big volume increase, like that volume there wouldn't be enough. And then number 3, a fair value gap gets created with that move, leaving some of the buyers behind, right? The first thing we want to see is a break of structure here, right? And then I'll hit pause. There we go. So we see a very nice break of structure. Let's mark that one off. Here we go here. I would mark that as an up shift, upward break. It's on a lower time frame, so we're just going to mark that as a upward break. Okay, perfect. Now, rule number 1, nailed. Rule number 2, do we see an increase in volume? I think you'd fair to say, absolutely, we see volume increase there. What's that indicate to us? Well, number 1, it indicates that bigger players like institutional hedge funds, big money, right? This is the NQ, so we're not talking pittance here. Has created a big shift there. So there's clues to us that that's hedge fund based. So now we can kind of mark off, because we've had the break, we've seen an increase in volume, and we've seen a fair value gap created, we can mark off what we would call our order block. Now, what's an order block? The order block is really the last location before that institutional funds come in, and well, it's bearish, right? So we've got to look for the bearish area before the move. Well, this last bearish candle here is that whole zone, right? That's the whole zone that we have to mark off. It's not always as big as this. It just depends on how big that last red candle would be, right? So, but that's our order block. So we can't define anything else other than say that's the area where price really expanded from. So we've got that nailed. Next thing we want to do though is inside that order block, as we have it, we also have a fair value gap, which is the distance or the gap that's between the 3 candles. So the middle candle is the expanded candle, and then the 2 wicks, we're just defining that there. Perfect. We've got the wicks, and then that's our fair value gap within the order block. So now it's great. Okay, so we've got an area, we've got a setup, and now we're just waiting patiently for price to come back into the air. Now the reality is, okay, well, whereabouts in this zone do we want to put our buy? Well, that's always going to be entirely up to yourselves. However, I always like to just make sure that I don't miss out on the trade. We go with a long position, right? And so I would just go at the top of the fair value gap. My stop loss, if you want to be uber safe, you want to go underneath the order block. You want to have a little bit more risk to reward to play with, you can go below the fair value gap. It's entirely up to yourself. Just know that I've seen these break, I've seen these hold. If we want to play a bit more on the side of caution, let's just go beneath the order block itself. And then the top, well, we want to make sure that this will always be wherever this high ends up. So we don't know 2 things at this moment in time. We don't know where the top of this is going to be, because if it retraces back down now, then that's going to be the top that we want to target for our take profit, right? That's the first thing. Second thing, we want to make sure that the zone that we have here is in actual fact a discount zone, and we know it's a discount zone because it's in the bottom half. I don't even need to bring my value 50% is in the middle, right? That's the equilibrium point, and then up here would be classed as premium. Down here would be, you know, your discounted area. If I drag from top to bottom or bottom to top, it would change whether it was green or red at the bottom. The colors don't really matter, right? But this is the discounted zone, so we know we're well in that kind of discounted zone. And I would even argue that's probably 618 to 7 maybe. So even there, you're down to that kind of golden zone, that golden pocket. Just more confluence. Anyway, we digress. Let's move on. So now what we're looking to do is see where price actually goes to, right? Because that's effectively going to be where we top out. Let's play. Okay, so we haven't got in on a price yet. We're just continuing to let it play out. Okay, don't worry, we know we've got everything marked. So let's continue play. Oh, perfect. Right, that would have tagged us there. Okay, right at the top of that old fair value gap. So we are in the trade, and we're just below here. Now the top, right, is here. Right, so what is that? It's about 2.85 to 1. Of course, if I was more or less liberal, I would have brought that maybe here below the fair value gap, and that might have been a 5 to 1. But we're not here to demonstrate that we're cocky. We're just, you know, just getting nice setups, right? So now we've got to see how this portrays across the rest of the trade, and let's see if we get a win. Price is going back down. I'm just going to expand this on. Confident in this zone, right? Because it's institutional. We know it's institutional because of the way the candles moved, and there we go. You know, breaks up to the upside, and we get our trade. So just remember the 3 golden rules. Rule number 1, market shift break. We get a break here, right? That's nice. Market structure breaks. Number 2, Does that break occur with a big rise in volume? That's arbitrary. It's not like it has to go over a certain value, but it has to be a lot higher, you know, than what you've seen in the past. And clearly with, you know, you can see it's a lot higher. And then do we create a fair value gap with that shift? They're the 3 golden rules. You get them right, you're almost onto very, very good setups each and every time. You might have to hold on to them for a while and wait a little bit, but trust me, that's how you weed out the crap from the good. Okay,